Everyone knows what gold is. It has seemingly been around since the beginning of time. It's very rare, difficult to mine and difficult to bring into circulation. Do you know what else is? Did we even need to ask? You guessed right. It's Bitcoin. Welcome to Crypto Sketch 101. We're the #1 go-to spot for all things crypto, and we're glad you've stopped by. If you love cryptos as much as we do, please give this video a like, and be sure to subscribe to our channel. In today's video, we're diving straight into the great debate. Which is better? Bitcoin or gold? We'll take a look at the pros and cons of each, dig into some fine details, and talk about some things you may want to consider. Is there a clear winner? We certainly think so. Stick around to the end to find out which one we believe comes out on top. Everyone knows what gold is. We've all seen it on TV and on the internet. Some of us have even held it in our hands. It's shiny, beautiful, and looks great in jewelry. But there's something else that's beautiful about gold as well. For investors, it's a great store of value and beautiful hedge against inflation. It can mostly stand the test of time without diminishing in value. It is scarce and therefore has great value. By contrast, fiat currencies are controlled by central banks and can be printed at will. When too much money is printed, the supply goes up and value goes down. But gold is not without its cons. First off, it must be stored somewhere. Do you have a big safe or a vault to store it on site? If not, it could be susceptible to theft. If you're storing it off-site, it might not be easily accessible when you want to get to it. Secondly, while gold may be a great store of value and hedge against inflation, it has not provided a good historical return. If you went back to the early 1800s and invested $10,000 each in stocks, bonds and gold, their values today would be around $5.6 billion in stock, $8 million in bonds, and a measly $26,000 in gold. You shouldn't expect gold to increase in value by very much over time. Now let's take a look at Bitcoin. Like gold, Bitcoin is seen as a store of value and hedge against inflation. The founder or founders of Bitcoin capped its supply at 21 million. This means that only 21 million Bitcoins can ever be mined and brought into circulation. In doing so, they made it finite and scarce. They also introduced the halving cycle. For every 210,000 blocks that are mined, the Bitcoin reward is cut in half. Essentially, Bitcoin miners, over time, will have to work harder to mine and the Bitcoin payout will be less. Again, making Bitcoin rare, scarce and valuable. Bitcoin is also accessible and liquid. It is digital and therefore takes only a few minutes to transfer to anyone anywhere in the world. Bitcoin, by design, is decentralized as well. It is not regulated by a central bank or government. Proponents believe that this gives owners more autonomy and control over it. But Bitcoin is not without some cons. For one, it can be very volatile. Bitcoin has seen incredible gains as well as devastating crashes. In what some refer to as the Great Crypto Crash of 2018, Bitcoin crashed nearly 80% in November of that year, having lost nearly a third of its value in the previous week. Secondly, as we mentioned before, Bitcoin is not regulated. While some may see this as a benefit, the lack of regulation means that Bitcoin doesn't come with legal protection and is susceptible to scams. Lastly, Bitcoin transactions can be final and irreversible. If you send Bitcoin to the wrong person or send the wrong amount, there's really nothing that can be done. Likewise, there is the risk of complete and total loss. Bitcoins are kept in a crypto wallet. Losing the private key to the wallet means losing your entire investment, as was the case with Stephen Thomas. In early 2011, Thomas produced a video on how cryptocurrencies work. As a reward, he was gifted around 7,000 bitcoins. The following year, he lost his password. Today the value of his bitcoin stands around $455 million. Unless he can remember his password, the bitcoins will be gone forever. So, which is the best to have? Which one comes out on top? Some have argued that the debate is silly and there shouldn't have to be a choice between the two. Any diversified portfolio should have a mix of assets, meaning that you don't have to have all gold or all Bitcoin. You can have both. Others have argued that the two have nothing in common. Peter Schiff, a longtime gold proponent, believes that Bitcoin doesn't have any of the metallic properties that give gold its value. He believes that Bitcoin has been marketed like gold but has nothing to back it. In essence, he believes that Bitcoin has been nothing more than a marketing fraud positioned to look like gold. He believes it has no substance. What are your thoughts? Do you believe that one is better than the other? Do you believe that both can have value? Leave a comment below, we'd love to hear your thoughts. At this point you may be wondering what we think about the great debate. No doubt, we believe that Bitcoin isn't going anywhere anytime soon. In a short time, it has already made a tremendous impact on so many lives. It was one of the first to apply blockchain technology, and in doing so, helped give rise to decentralized apps, NFTs, smart contracts, and thousands of other unique cryptocurrencies. It is said that Bitcoin is the future of finance, and we would agree. And that's all that we have for this video. We hope you enjoyed it and got a good measure of the pros and cons of both gold and Bitcoin. Once again, if you enjoyed the video, please give it a like and be sure to subscribe for future videos. Take care and we'll see you in the next one.